Good afternoon, everybody, and welcome to another edition of ChartWatch Live. My name is Capolingua. I'm from Market Index, Live by Markets, and it is a pleasure to chat markets with you on a Wednesday at lunchtime. And there is so much to chat about today, of course. Big falls in global markets in the last 24 hours. I want to talk about that, but I want to check out what the stock indices are doing. We'll check out some commodity prices. We'll even have a look at the bond market and see if we can put it all together and figure out what might be happening next. Apart from that, of course, I do want to get to your regular requests, both on and offline, and then hang around to the end if you're interested in getting hold of my trend ribbons on TradingView. I'll tell you how to do that. Let's head over to the AMI Broker screen. We'll kick off with our portfolio management model, and I have the Nasdaq Composite on screen. And just a background, if you're new to ChartWatch Live, how the model works is when the markets are going very well. So we'll have double greens on my trend ribbons that are designed to track both short-term and long-term movement. The way I like to think about it is, what are short-term traders doing? What is the balance between demand and supply in the short term? And what is the balance between demand and supply in the long term? When they're in alignment, we tend to have lower volatility trends. We have the best environment to take risk. And that's ultimately what this portfolio management model comes down to. Allowing us to take more risk in low volatility markets, but then forcing us to pare back our risk in higher volatility markets. If you have been watching ChartWatch for a longer period of time, you know that on the Nasdaq Composite, which covers my US stock trading. So for the money I'm trading in the US, this determines how much I can invest and how much I need to have in cash. We're at 50-50. So 50% allowed to buy stocks and 50% must be put in cash, safe and secure, earning, look, it's a few percent now, isn't it? If you're really clever, you might be able to get over 4% over here in Australia, which is better than the average yield on this index. So you're literally getting paid more than the average yield on the index to sit around and do nothing, but preserve your capital. So if the Nasdaq was to fall 10%, effectively your cash has increased in 10% in terms of its buying power. And I think that's the perfect place to be. I'm very proud of my portfolio management model. Hopefully you're using it and you're finding that it is doing some very sensible things for your risk management as well. But let me say that in terms of, that's the model, but in terms of trying to understand where the Nasdaq might go next on a more often than not basis, I'm seeing plenty of signs of strength here, of underlying strength, of latent demand. If we look at how the Nasdaq has responded to its interaction with the long-term trend ribbon, and what we'll find more often than not, hey, it doesn't happen all the time, but more often than not, when the price interacts with that long-term trend ribbon, it tends to bounce off it. As you can see also, when it interacts with the short-term trend ribbon, it tends to bounce off it as well, okay? Until it doesn't, and then we're getting another signal, and there's value in that, okay? But it's doing its job. We look at how many white candles we've had in and around that long-term uptrend ribbon. These are the longer-term positional investors that are looking to buy the dip from short-term instability or a lack of faith, I guess, from the short-term traders. So at the moment, we are seeing some accumulation and soaking up of that short-term supply. How long that can last, I don't know, ladies and gentlemen. If you tuned in because you thought Carl has all the answers and knows what's going to happen next, I don't. I wouldn't have a clue. It's trend following. I can only see what's come, and I have no idea what's going to happen next because the future is unknown. But I can say that more often than not, this still looks like a scenario where the price can bounce off that long-term trend ribbon and perpetuate or continue this long-term uptrend. And what's wonderful about that concept is that if we do see a break, then we know we're in a very different environment. So 22,256, I think, is a critical level. You can see what we are probing, we are testing, we're even tickling that level. 21,898 potentially as a point of no return, I think, for this long-term trend. If we close beneath 21,898, more than likely that ribbon is not green anymore. It's starting to turn amber, and we're very much then in a something else market. What does a something else market look like? You can see that the last time we had an interaction with that ribbon, it didn't bounce. It's one of those few times it didn't bounce. But as I said, there's information when it doesn't, and there's a move there. And we'll go back to the one before that. Very brief one here. I would call that a halt more than anything else. And we can see on the way down, the ribbon does its job by impeding price action until it doesn't. And then we're getting information. We're getting signals. Here's one here. We don't want to be in long-term trend ribbon amber, and we certainly don't want to be trading beneath it. Okay, you can see how solid that has been, and that's exciting for me. I mean, I think I get goosebumps when I talk about this stuff, because some people, of course, are very concerned about markets. For me, I'm 50-50. I'm 50% cash. I'm not worried at all, and I've got a great tool to help me understand what I need, how I need to further manage that risk. Okay, I don't need to spend too much time talking on the ASX 200 because we know how the model works. We had some interesting times here, and again, I would call this more of a hold than a fail. A fail is where you move beneath the ribbon, right? You move beneath the ribbon, you come back into the ribbon, and the ribbon starts to push you down again. Okay, which is a silly thing to say because the ribbon can't do anything. It's an inanimate object. But we see the price action fail and start to move down. So not a fail here. I'd say that's still a hold. Unfortunately, here we have gone from the most invincible showing here on that candle there, because that's our first response to the developments in the Middle East, and we did so well, and then, as is the case. I mean, this candle here is a more often than not, we should continue to go up candle, but that's more often than not. It's not every single time. This candle here is a pretty good indication that something's not right, and we're seeing a bit of a follow through today. However, today's candle is open. You can tell from my tone and the look on my face, this is disappointing, because obviously this is starting to look good, but them's the breaks, and we just need to manage our risk accordingly. With the close beneath the short-term uptrend ribbon, you can see the short-term uptrend ribbon has been doing a pretty good job of supporting the price, telling you what the shorter term sentiment is in the market, and it closed beneath 89.87. Look, there's a very good chance in tonight's evening wrap, where I update you, we'll probably go back to 2/3 risk position here, because we were full risk position because it was making all-time highs, and them's the breaks, as I said. Sometimes we've got our portfolio management model, we've analysed, we've accepted, as painful as that might be sometimes, and we've acted by adjusting our risk management. But just before we do that act part, are there any charts out there that might say I need to go further? Is there something I haven't considered? And I call it the whip around the ground. So I look at major global indices. So in this case, the Dow Jones Industrial Average, the top 30 big blue chip stocks. Are we seeing a rotation into value, or into growth, or what are the relative movements there? And this is the place you want to see for rotations generally into value. We're in a short-term downtrend, still long-term uptrend. Are there any red flags here to suggest that I need to act more decisively on my risk management in the US? Not really. And the Russell 2000, it's not ideal in terms of its price action. It's back below the short-term trend ribbon. But again, there's nothing so sinister here that it would warrant me to make any more drastic moves on my US risk. In fact, what we're seeing here, very similar to the Nasdaq, is demand actually buying the dip, that long downward point in shadow. It started off as a big black candle at one stage. So that was a full black candle, which, if you can imagine, if we closed with that full black candle, and much like the candle we've got on the ASX 200, it means something very different. But when the demand starts to come in and buy that dip, it pushes the price back up and forms that downward pointing shadow. And we say that the shadows point to where there is latent demand or supply in the market. Downward pointing shadows are pointing to where there's latent demand. There's latent excess demand in this environment. Again, what does it mean? Okay, well, it doesn't mean much unless we hold it or break it. And as long as we continue to hold it, that's very positive. But we've also been just so wonderful that the market has delivered us such a decisive point where if we trade beneath that, if we close beneath that level, what does it tell you about the latent demand that was in the system? It's been fulfilled, it's been consumed by supply. So I think we're very lucky to have the candles that we've had in the last 24 hours. That's the S&P 500. But interesting, when we move to some of the other indices over there, they're not quite as bad. Far worse in what we're seeing in Europe. So, we are seeing, obviously, the impacts of what's happening in the Middle East having some more significant impacts elsewhere. And this is not, we don't want to see this. And we can see largely what the Australian market is responding to. So are we trading more like the American indices, or are we trading more like the European indices? And that might help us, just to keep an eye out on what's more likely to. What basket are we in as far as global fund managers are concerned? And we can see here definitely European stocks look more similar to what we're doing. Heading over to Asia there, the Hang Seng, the Nikkei. I just want to whiz through these. Again, we're looking for red flags. Are there anything? Is there anything really obvious? I don't think so. Look, a lot of these trends, whilst they might not be fantastic, they don't look, long-term downtrend-esque at this stage. I'd love them to be better. Looking at some of the local indices now, again, we've talked about the ASX risk management model, but within our market, are there sectors which are still well placed to outperform? And I put to you that consumer discretionary is not one of those sectors. That is clear downtrend. That is breaking through the long-term trend ribbon, coming back up, testing it. The ribbon is amber. Ladies and gentlemen, the model is clear, and it unfortunately for some works very well. So if you're holding consumer discretionary stocks, I mean, this was your first big signal that you probably shouldn't. And then after this point here, my model basically prohibits any risk in JB Hi-Fi or Harvey Norman or Temple and Webster or any of those. And I wonder if people who are listening today still own those stocks and maybe are wishing that they had this model a little earlier. Energy, for obvious reasons, still looks pretty good. I know it's down a little bit today. Financials, key swing factor in our market. Is it a red flag? No, I still think that's still relatively strong. Hopefully it stays that way. Gold was doing well, bit of a pullback, but still underlying trends okay. This is clearly another market where, well, really after this day, my model prohibits having any risk in this sector. So I couldn't own CSL, I couldn't own Cochlear, I couldn't own any of those other ones. I can't think of them right now. And that still looks very much set in its trends, as does the technology sector. There's a couple of versions there. Materials is obviously the one we want to know about, more specifically resources for me. Because this will take out your James Hardys and a few other things, which honestly I couldn't care less about, and focus this more on the commodity stocks. Whilst we're still in this phase here, I think we're okay. We've seen, let me change the colour of that so it's easy to see on the light green. We've seen pullbacks like this before. Once again, the pullback is not the problem. It's the interaction with the levels. We either get our clear signal that we're heading back up and we're okay, or if we start trading down here, we know, therefore, that some risk adjustment might well be required. Property is almost one of those early stage like discretionary and technology that we saw before, but once again the model is just doing what the model does, and don't mess with the model, isn't it? You can think your stock is the best in the world, but unfortunately if it falls foul of the model, that's usually not a good thing. Staples, that's all Woolworths. Telecommunications, that's mostly Telstra in that rally. The rest of it is more like technology and stuff, and utilities is about 4 stocks. Let us quickly do some of the metals moves here. Lithium carbonate, which we have talked about a few times, and funnily enough, you have to understand that these dashed lines are never a prediction. I assure you I did not predict that this was going to happen. Much like we said last week, as we hadn't looked at it for a couple of weeks, I drew these dashed lines, and lo and behold, the price did exactly what the dashed line suggested. And then last week we drew these dashed lines, and it was not me making a prediction. It was me saying that, and you can see MPOS, question mark, question mark, question mark. What happens here, okay? We were looking at, might have been that day there, as you can see, that's where the dashed line ends. We're saying, okay, nice rally. Formed a major point of demand, moving back into this, sawtooth pattern back up, rising peaks, rising troughs, demand reinforcement, supply removal. So fantastic. But what happens here? And what we got was the big black candle. We tried to come back, decent little downward pointing shadow, bit of demand coming in, and then we got confirmation again that supply is here, and it means business, and then really peeled off yesterday. So not a prediction. Should I draw some dashed lines for what might happen next? Let's do that just for fun. Let's see if I can go 3 for 3. On the strength of this candle, the probabilities associated with that candle, in my experience, I cannot draw the ones going up, unfortunately. I think more likely we see something like this, and then let us see how we respond here. And I won't draw any more than that, okay? prognostication is futile. The future is unknown. But when I draw dashed lines like that, I'm saying, well, based upon my experience of exactly that picture, which I've seen, I can assure you I've seen 1,000 times before, probably more. That's my experience of what might happen. A few people quite surprised and hoping that doesn't happen. And at the end of the day, again, I'm not making stuff happen. I'm just saying that's what looks more likely to me. Let's go back. A few people don't mind it. Let's go back here and just see if we've got the latest one in. I'm not getting LME updates there, so the data provider's not being helpful. But what we can do is see how they're trading before, I'm guessing, last night's pullback. And still the trends are okay there. Well, iron ore, that's a different kettle of fish. Not terrible on nickel. Lead never got going. Tin still looks very strong, as does zinc. So war's not terrible for commodities, ladies and gentlemen. War is actually usually a pretty good thing for commodities, as crazy as that sounds. Okay, I'm going to finish the whip around the grounds by heading not over here to Twitter or X, where I'm just checking my post this morning about Newcastle coal futures, which we're actually going to look at now. That's the segue. And why don't we start there? Because obviously when the oil price is going up, we've got concerns about global energy supply, it's possible that we're going to see coal futures rally, and I thought that was an interesting chart to look at this morning, so I posted on it. And a classic turnaround setup, it helps me, I guess, make this point that what we looked at before for the model finding trends that are changing from up to down, it works also for down to up. So we can see a very well established, like absolutely clockwork downtrend here, where again, you don't mess with the long-term trend ribbon, I think is the message. When you get beneath it and you start to fail beneath it, it's usually not a good thing. Usually, I mean, more often than not. And then you see these rallies and you think from 95 into 110, 115, people are probably getting pretty excited that the trend has changed. But my model assures me it hasn't. And again here, but now my model is saying, well, something different's happened this time. This is different. We're above the ribbon. Okay, the ribbon is no longer impeding upside progress. In fact, it's starting to support it. Okay, so this is what I call my turnaround setup for obvious reasons. In this case, it's you can say a bullish turnaround setup or a long turnaround setup as it's going from down to up. And the fact that we are now treating that long-term trend ribbon, and in fact the short-term trend ribbon as a zone of dynamic demand, is usually more often than not, a signal that the long-term trend is changing. I'd go so far as to say it's changed. So I'd actually call that a long-term uptrend. And I know that sounds very weird because it's still amber, but there's enough other stuff in there for me to start to trade on that basis or manage my risk on that basis. Now, I'm not trading thermal coal futures, okay, as exotic as that sounds, but it will help me understand how some of the other pieces of the puzzle fit together. And that's what this introduction is today. I know it's not what we usually do. We normally, by now, 4 or 5 stocks deep on your request, but hopefully there's some value in this as well, in just seeing what's going on in the world. If you're enjoying what we're doing, thumbs up. If you're not, do this surprise face emoji and we'll get to your requests very quickly. Okay, I think we're okay. So we want to talk about Brent crude futures, but we're not going to do line charts. Why? We're going to do candlestick charts. And there's a lot of, the news is awash, is it not? The news is awash about how much oil prices have gone up. They've spiked, they've rocketed, and all of these silly things. Look, it's gone up, I get it. But if we put it into perspective, I don't think it's gone up that much. I mean, if something really, really serious was happening in terms of global energy supply, then I feel we'd have a better candle than that. Now, I don't know what the candle is that's coming next. It could be better than this one, but I'm going to say on that, given the circumstances, I think we can pare back some of the hype and some of the rhetoric that journalists and media organisations love to throw at us. If we were believing them, we would think that it was, Ukraine, Russia invading Ukraine had a substantially greater impact on the oil price. And we go back to the first and the second Gulf Wars, and then you're going to see some proper impacts on the oil price, but not really here. And Brent is the key one to look at because that's more of your Europe and Mid-East benchmark. And then the one in the US, West Texas, light crude here, you can see even a more muted response because there are very few questions about US crude oil supply, of course. So I'm not saying this can't continue to go up. For that, let's do the analysis. Let's analyse go back to the daily chart. I want to go to Brent Crude, and we have a turnaround set up. Okay, so we can see where none of these moves. Remember how I determined whether the model or the trend had held or the trend had been broken. In the absence of the confirming trough above the ribbon, for me, when we get back below the ribbon, I say the trend is held. Okay, so the turnaround setup requires the trend ribbon to transition from dynamic supply to dynamic demand. And here we have it. Okay, so officially, I say that we're in a new long-term uptrend for crude oil. I know this is still amber, it's not green yet, but we have done enough to put us on that path. Whereas here, both of those were not the case. Okay, so all I'm trying to say is I'm not trying to say, oh, the model's very good. I'm just trying to say that the model is seeing something different this time. Now, it's up to you to determine if the model's any good. That's your decision. And I can show you stuff like, well, that's a hold. That's a hold. There are no troughs above the long-term trend ribbon in either of those. So the model has been impeccable, absolutely impeccable this entire bear market in oil until now something has changed. Something is different. So in that regard, yes. So that's our analyse. Our accept is, well, I don't think we're seeing something maybe as explosive as in the past, but I have to accept that this is an uptrend. Okay, so in that way, when it comes to acting, my allocation of risk is towards, I'm going long here. So that's the 3 A's there. So yes, I can happily add risk to that chart. I get to the OOOs. Okay, so that is one way that you can trade it in Australia if you didn't want to go and get a futures account and trade the crude oil futures there. I'm pretty sure this has been in the, now this is not for you, this is more for me, just so I can confirm in my brain. I'm pretty sure it's appeared. I can't remember every chart that's gone in. Yes, it has. So you can see here, that's old. that's from May. So you can see the last time that my model, and this is ChartWatch ASX Scans, picked the triple O's as a buy all the way back in May 2024. And then not until this year. Like, we saw the chart, right? We saw the crude oil chart and all those failures. So if you have to go back to 2024, since the last time that the triple O's were good enough to get in as an uptrend. But you can see 19th of Feb that's come in. So if we sort of just understand that you don't have to do all the analysis if you don't want to. You can just come and hang out with me, I guess, in ChartWatch, and you're getting in around there. If you don't know what ChartWatch is, it's just where I provide for you right here on the Market Index webpage every day. All the work I do on a daily basis, all my uptrends, all my downtrends, these are things that I'm looking to invest in myself, okay? And I publish it for free every day there. Let us complete our whip around the grounds. We'll head back over here. We've talked about crude oil. I want to talk about uranium very quickly. That one's coming off. Typically what we tend to see is when energy prices rise, this should go up. It's not. There are some other factors. We've just had Cameco's just reported its results as well, and there was a few things maybe in there that's holding it down. But I'm just saying, more often than not, keep an eye on that one. Looking at some of the base metals here, maybe some of the metals impacts. Not a lot going on there. I don't think we're seeing any obvious correlations. Copper, as I said, metals tend to be pretty strong. Precious metals tend to be very strong in times of war. However, we are seeing a little bit of the buy the rumour, sell the fact on this one, on gold. I'm still pretty happy with this. I can't fault it. I know that last candle is not ideal, and I'm watching it very, very closely, because what I don't like to see is this up here. So we obviously have our point of supply, and then I don't want to see points of supply that confirm it. It's a bit like what we saw on lithium. It's nowhere near as bad, because that was a really, really big reversal from a well-known area of supply, historical area of supply. So there was lots of supply in that. We saw the dark pink band in the past, so there could be supply there in the future. Here, this is blue sky. There was nothing to define that. It was circumstances. And so we're watching this. Now, where do we start to become concerned on gold? And no doubt people listening today have a bunch of gold stocks in their portfolio, whether it's for fundamental reasons or you're just a trend follower like me, and many of those trends have been very, very strong. Okay, I wouldn't want to see it close beneath here. So that's sort of 4,800. If we're starting to see a 47 handle close, then we're more concerned. Are we throwing the baby out with the bathwater? No, it just means we're adjusting our risk. If we're fully invested in the gold theme, we may be paring back to 80% or 2/3 or 50% and so on. Okay. Silver, very interesting. I had called this as a cycle high because of the magnitude of this candle. We've discussed this in these sessions before as to why that would be the case. Starting to think maybe it was starting to look a little bit warm again, but we can see a more severe move. Not only was this more severe, but then this is a bit more severe, and we're beneath the short-term uptrend ribbon here. So you all know I'm less bullish on silver than gold. But I wouldn't say I'm bearish on silver necessarily. Where would I start to become quote unquote bearish on silver? Similar sort of area. So 69 handle, and I think silver's starting to really confirm this. This is a cycle high, and then that is more of an intermediate high. And I think that's it. We might just have a quick look at the AUD USD just while we're here, and that's obviously been very very strong, but when markets go risk off, there can be a little bit of a pullback, but otherwise I think the trends are very, very strong there. I will finish by, I don't want to put you to sleep by talking about bonds, but I will say that the US 10s are usually a really good proxy for risk sentiment. So what I'm trying to give you here is things you can watch at home. No doubt many of you have TradingView, and you can see, you can grab the codes. If you're watching in the recording or if you're watching live, go get the recording, and you can see all my codes there, and you can just type them in and make a global macro watch list of all the stuff we've gone through. So that's pretty neat as well. So what's going on with bonds? Okay, we did see leading into the attacks and just after the attacks in the immediate aftermath, we saw buying of bonds. So when bond yields are going down, bond prices are going up. So that's very normal, sensible sort of stuff. There was a period of time where people didn't want to own US dollar assets and US treasuries, and that's usually the case when people are saying, oh no, the time for the US treasuries is over, and then the you-know-what hits the fan. And then all of a sudden they like US treasuries again. Uncle Sam always pays his bills. We've seen a little bit of a pushback the other way. There might have been some US data. I haven't seen it. That's a little bit unusual. But again, if this is going sideways, we're hunky-dory. So I can't see anything in there that's so sinister. That tells me that the demand we're seeing in here actually isn't sustainable, to be honest. Okay, that's the whip around the ground, ladies and gentlemen. Hopefully it just helped you put some of the pieces of the puzzle together today. A really interesting question. I normally save it for after session, but I thought it was too good. HK saying, using the charts, are there ways of spotting persistent shorting of a stock? For example, algorithmic trading, selling activities. And yes, there are. For me, the candles are the best. So if we go to something that has been shorted the hell out of, like a PME or a zero, for example, for me, the fingerprints of pervasive sell orders. So you've got to understand that if a big fund manager, it could be like an Australian super managing billions and billions of dollars, or it could be Goldman Sachs, or operating on behalf of a big Japanese pension fund. When they don't want to be in a stock, there's no way they can just put all the stock on the market at once. It would show their hand, the price would crash. It's impossible to do that. It's completely impractical. Imagine a big Japanese pension fund had, 13 million shares of zero. They're not going to put that on the market breadth so that when you tune into your CommSec screen, you go, oh, this 30, it's not going to happen. So it just goes into a computer now. It goes into an algorithm that will basically look for, on a second-by-second basis, the best possible time to sell. Let's say a bit of demand comes in because somebody thinks zero's cheap. And that algorithm will smack that demand. It'll take it. It'll sell it. Now it's only got 12,999,500 shares to go, right? A little bit more demand comes in, boom, they smack that. A little bit of demand comes in, boom, they smack that. Now the demand's going, and don't worry, there's no humans doing this. The algorithms that are controlling the buying orders are going, okay. Yep, I went on 3 times and got smacked straight away. there must be a big sell algorithm. Okay, well, my job as a buy algorithm is to try and get the best price for my buyer, the cheapest price, get the stock at the cheapest price. Of course, the sell algorithm's trying to get the highest price. So the buy algorithm goes, okay, well, I'm not going to put another bid on there. I might put it on a cent lower. And the sell algorithm will go after 5 minutes, well, there's no more buyers. I need to accept a lower price. Boom, hits that. Boom, boom. And then the demand goes, okay, well, I need to get out of town. And boom, 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 boom. And ladies and gentlemen, that creates the charts. And if we all think, if we're all still under this silliness that there are human beings doing much of this, I mean, it might be 2%, it might be 5%, it might be 10%. I don't know the exact number, but it's order of magnitude that. The other 90% is algorithms. Can I have a surprised face emoji of anybody who disagrees with me? Oh, no, Carl, it's still humans doing all of this. No surprised face emojis. Okay, so this is far more effective. This is far more efficient because the computer doesn't need to get up and go to the toilet or take lunch, okay? So what you are seeing in these black candles, and thank God the market, and be careful what I say, some people get upset if I blaspheme, but thank your maker, respectively, that this happens, ladies and gentlemen, because it's so good. It plays into our hands. When you are seeing black candle after black candle after black candle after black candle after black candle, what do you think you're seeing? Are you seeing the sell algorithms in total, absolute control of what that price is doing? Are you seeing the buy algorithms just getting the hell out of town? And the next day, the buyer, there's always buyers. There's always buyers because you, me, we're getting paid 12% of our income goes into our superannuation, and some of us have it in balanced funds. In fact, it's like 70, 80% of balanced fund members haven't made a choice. That's the default, right? It's that many. We get jobs, we get put on an industry fund, and we go into the balanced fund. We don't make any decisions about investing, so that money keeps flowing in. And there's always demand, there's always computers demanding, but the active fund managers, the hedge funds, the ones that have done all that whip around the grounds that we did and have come to an opinion that zero should be $70 when it's still 170, that they are hitting. And there's demand, but the algos are pulling back, and the algos are pulling back, and the algos are pulling back. So to answer your question, HK, the best tool you have to determine whether there is a big algo shorting your stock is just lots of black candles. And you can see it there, it's clear as day. I mean, and when did they start shorting it? Ladies and gentlemen, they started shorting it right here, like there. After that announcement, that was that takeover. They took over something in America. And you can see the candles went from predominantly white, which guess who's controlling that now, all the demand side buy orders, to just wall of black. Okay, and we can argue all day that the fundamentals are the most important thing and charts are irrelevant, but I put to you a very, very fundamental thing occurred right here on that day to change the market's view of the value of zero, which then drew in the short sellers. And the chart told us that. The fundamentals never would have told us that. So that hopefully answers your question, HK. It's a really good question. Paul, this is going to be our first stock-specific request this late. I'm sorry about that. But hopefully it's been worth your while up to this point. Developed Global, a bit of a lithium stock, is it not? Don't shoot the messenger here if he doesn't know what the company does, because remember, the messenger doesn't really care what the company does. It's irrelevant to me. Those fundamentals don't matter because I look at candles, I look at price action, I look at trends. So let us do it that way. Short-term uptrend, long-term uptrend. So we're okay. Analyze, accept, act. The only major problem I see for Developed Global in the last 20 odd candles is this one here. Okay. How significant was it? Well, if we come down here, and this is the optimized true range, you can use the average true range setting of 1, run a long-term moving average on it. It doesn't matter whatever your favorite one is. So it's a bit flat. Okay. Look at volume. So certainly it was a big day in terms of motivation. Okay. This is the motivation. Was it what's the right word? The motivation signal, I guess. How motivated is the market? Is there above average or below average motivation? Okay, this is the clout. How much clout was behind that motivation? And we can see, well, and there's a couple of ways to interpret it. So I'll finish that point in a second. Substantial motivation, well above average, not a lot of clout. Okay, and it'll depend on the scenario as to how meaningful that is. So there weren't lots of supply in that market. So we talk about the algorithms again. But the algorithm was very motivated. The sell algorithm was very motivated. But the problem for that sell algorithm is that the demand algorithms just took off. They did not want to be present on that day. The good news is we've found a bit of a level here at the short-term trend ribbon, coincidentally, where the demand algorithms appear to be kicking back in and overwhelming supply. This candle is still live. I cannot give you a definitive call on it until it is closed. That is my rule. I can say, however, if it closes like it's looking now or better, we're still okay. We're still short-term uptrend intact. This is annoying, but it doesn't change the accept and act part, which is we're still short-term uptrend and therefore we can still maintain our risk levels. I need to get to a point where I go equals R plus R or minus R. So equals R would be maintaining the risk that we have if we had it, and I could see reason to having risk on this one because the trends are solid. Okay, it very recently made an all-time high, so something's going right for this one. So plus R, equals R, or minus R are our three options, and I'm going to cross some of those out. Okay, so I don't think we're a plus R today. Okay, that might be different tomorrow. Give me this candle the way it is or better, and then give me another strong candle in here. Okay, closing at least halfway back above this one, just a balance thing. The balance of demand and supply, we've overcome the motivation that was in there. Okay, if we saw at least average volume, a bit more volume, that's telling me that the demand orders are coming in and they're clearing out some of that supply. Yes, there'd still be more supply, but hopefully with a nice big white candle, the motivation is strong. We know there must be some supply up here. Okay, we know that. Okay, and that's why I say on this occasion, if we saw a bit of demand, it would be healthy, because there is latent supply here that must be dealt with. Okay, and the extra volume would say extra interest, that's good, extra demand side interest, but also clearing of that latent supply, so that would be healthy too. We don't have it yet, but I'm telling you that's what I would need to get back to plus R. Okay, I'm also not minus R at this stage. So it's process of elimination, okay? What does that leave me with? Equals R. So happy to maintain the risk on this. Now where would I, and that's the logical step. Now, if I had it, I must also know where my exit is. Last week, I told you the story about James Bond in the Monte Carlo casino. James Bond always knows where his exit is. Certainly, I would not like to see it close beneath the short-term trend ribbon, okay? Particularly with a full black candle. Okay, you can see here it closed beneath, it actually didn't close beneath the trend ribbon there. Here it closed beneath the trend ribbon, but it didn't close with a full black candle. We still saw the demand side algorithms coming in to buy the dip. This one is far more sinister. On that day there, I would certainly have reduced risk, and I might have regretted it on that day, but them's the breaks. Okay, so I don't want to see that sort of candle coming in here. That would cause me to reduce risk. In this case, it didn't turn out to be the right thing to do, but next time, more often than not, it probably will be. So that one is for Paul. I'm going to go to Mark's got FTI, which again, under different circumstances, probably would be looking a little better, because, you know, yesterday our market got hit and all we saw was really demand, solid demand. Today we're seeing, you know, we get to a point that's in many cases where it doesn't matter how good you are, you're going to succumb to the broader market sentiment. And I think that's what we're seeing today. What I can say is, look, that's where the demand kicked in last time. How do we know? We've got a long downward pointing shadow. At one stage, this was a big black candle. Yesterday, lots of things were down, but the demand came back in and brought it up. And we're starting to see, in fact, you can see here, a bit of volume. I don't know what's going on. Maybe there's an announcement. I don't know. But we're starting to see some motivation and some interaction from the supply side. But as it's coming down, the demand is still there. I mean, we see there's still lots of demand in the system, but the problem now is, yesterday they won the battle, today they're starting to lose the battle, okay? Lots of demand in the system. Yesterday they won the battle, today they're starting to lose the battle. So that's a bit of concern for me, okay? if we were to see a full black candle that closed beneath where the demand kicked in yesterday, for me, and you can do whatever the hell it is you want, but for me, in this environment in particular, I want to get as much of that risk just to the safety of cash. Okay, I can always get back in if I start to see accumulation of white candles again, but I'm going to err on the side of caution, and also, I've got a minus risk here. And you've got to understand the way my model works. It's never all in, never all out. Actually, that's not true. It's never all in and it's rarely all out. But order of magnitude, a minus R for me, I'm going to knock. I like to deal in thirds, and then, another third is what we're seeing there. But this could be 2, because if we were to see a big black candle beneath the point of demand, they stack on top of themselves for me. So I can't say which one yet because I haven't seen it. Should get to the end point, which is where are we at? And this is kind of the point now. We've taken plus R off the table. I think we can all agree on that. We're not minus R yet, so we must be therefore equals R. And I think this process that we're going through it's just so robust in terms of we always know what we need to do. We need to check the trends. We need to check the price action. We need to check the candles. We need to then come to a decision about plus R equals R minus R. And then the most important thing is the acting part, because some of us will get to that minus R, won't we? I'm looking at you now. I know you in particular. You'll get to that minus R and you'll know you need to do minus R, and then what do you do about it? Equals R. Yep. So bit of discipline is also required. Julian's got, that's a long one. Julian, I might answer that one at the end. PNR is coming up here for Anders. Again, another one that was starting to look quite good again. I don't recall it appearing in my lists very recently. I was waiting. For me, this is a zone of supply here that I felt that really needed to be dealt with, and I didn't get a decisive candle that had done it. It was very close. So yeah, look, we're going to see a lot of these where they're not terrible, but they're not giving us screaming indications to get out just yet. And this, unfortunately, is part and parcel of trend following. You're following a trend. By definition, you therefore must give up some of that trend before you get your minus R indications. And I don't have one yet. All I can see is a short-term uptrend and a long-term uptrend. And I haven't done this enough yet, and I should have done it more, is checking the price action. And technically, we're still rising peaks and rising troughs. And this last rise is substantial. I know we've got a little bit of a downward here, but we're still very strong here. I would like to think the short-term uptrend ribbon will hold this one, will support this one. I won't know till we get there. All I can give you, ladies and gentlemen, and hopefully people aren't frustrated by this, is equals R. But what I can tell you, where will it start to become minus R? Well, I don't want to see it close beneath that short-term trend ribbon. I believe the short-term trend ribbon tends to support the price on the way up. I'm just trying to get that flat, particularly with a big black candle. We know we don't want those big black candles. Okay, so if you were hoping to get the definitive Carl, oh no, what are you talking about? That's a sell. Or that's a hold, that's a buy. It just doesn't work like that. I can only make my best call based upon the probabilities I understand from the pictures I'm seeing on screen. This is great. Isn't it great that we've actually come to this chart next? Because this one is far more definitive in its demand on us to act and manage our risk. So we have, actually I shouldn't have, I nearly said we have closed beneath the short-term trend ribbon. Well, we haven't, because this candle is still live. Okay, but it's looking that way. So if we closed with the candle that looks like that, or worse, we're starting to see a little bit of a downward shadow creep in. If we got a full downward shadow, or even we made it to a white body, I could happily give it another day, but then I would absolutely must therefore peg that low as a point of no return, because I can't keep allowing another candle and another candle and another candle below my short-term trend ribbon, right? I have to have that finite exit. But I can forgive it, that one that gets beneath but throws in a nice downward shadow or puts in a white body, because it's not telling you need to minus R. But we need a point of no return. The great thing about using this sort of little trick, and we haven't talked about this, so this is a little pro tip that I'm sharing with you for the first time. It'll make a lot of sense when you hear it. If we end up with, so we're beneath the short-term trend ribbon, my view on that, I don't like that. For me, typically, when we're beneath the short-term trend ribbon, not always, you can see not always here, okay, but we need to manage some risk. Generally, when we're above it, we're okay. Generally, when we get beneath it, we're not okay. You can see here, we're generally above it. Like if you see something, and I said this last week, but if you see something work, if you look, so there, beneath it, might want to manage some risk. But if you see something work like time and time again, why do you want to bet against it? Like, of all the times that it supported the ribbon, and one time here it gave me a false signal. Like here it closed beneath it, maybe here it closed beneath it. All right, and it actually turned to amber. So here's a false signal to exit. So in all of these times, like we've got a proper one false signal to exit. If something's that reliable, why would you not then follow it? Hopefully it's clicking. So my point is, I don't want to be beneath the short-term trend ribbon. I don't like that. That's, for me, is a trigger to manage my risk. But if I ended up with a candle that looked like this, right? This is, bear with me. This will make sense in a second. I just want to make it black, and then we'll draw a line down. And that's not the right one, is it? Because that's actually closed in the ribbon, so that's okay. So what's a better example? Let's change it up a little bit. So let's take that down. And what we're saying is we had a candle that maybe closed like this. Okay, so it's beneath the ribbon, right? Let's make it a bit more clearer. So it's closed beneath the ribbon, but it's closed with a candle that looks like that. Okay, so what do? Okay, we don't want to be beneath the ribbon. We know that more often than not all the time, but more often than not, that's generally not a good thing. But we've actually got a demand side control candle. If our view is that the ribbon tends to support price, well, this is kind of in line with that view. The demand has come in, it just was a little bit late, or the broader market was down quite a lot on that day, and the open was a bit lower. The fund manager didn't switch on the algorithm until a little bit later that day. Whatever, it's irrelevant. But we are seeing demand where we're expecting to see demand. So why would we minus R on that candle? But I need a point of no return. I can't keep going. Let's say, hopefully this is where it makes sense. I can't keep saying, well, the next candle is down here, right? So I have to give it another day, all right? And the next candle is down here, so I have to where does it end? Right, so am I still hanging on that day because it's demand side control candle? Well, I'm losing more and more money. Okay, so what I like to do is say, well, okay, that's a good candle. It's the first instance that we've closed beneath the short-term trend ribbon. That means something to me, but I can't let it close beneath the low of that candle now. Okay, this is where the demand is kicked back in. So I've got that demand protecting me. Okay. Yes, there was latent demand in the system. I'm hoping it's there tomorrow. Okay, but if it's not there tomorrow, and hopefully I don't get a big black candle like that causes me to miss out on too much. I'll change it because that's a bit frightening. Let's do that. If it does that tomorrow, that demand is gone, and therefore not only am I beneath the short-term trend ribbon, but I've just taken out a really valuable demand side showing, and I've got a really bad candle. So this should start to play in your mind in terms of, well, we know it's minus R, but is it minus R, or is it minus R, minus R, minus R? Okay, and this is where there's a little bit of discretion in the model. Hopefully you agree that candles, trends, there's very little discretion. These are fairly explicit. I've taught you the rules, you can follow those, but at the end of the day, you need to do you. What does that candle mean to you in terms of managing your risk? Let us delete all of those things now, and let me give Chris my view on SXE. Okay, so today's candle is crucial. Obviously, we could well be minus R today. Let's see how it closes. I've taught you how to deal with that. If it closes full black or if it closes white. Were there other signals to get out prior to this? And I don't think there were. If we just look at candle by candle basis, so we go to this one, is that a signal to minus R? No way. I mean, everything looks fine there. Even that one, there's a bit of an upward pointing shadow, and the upward pointing shadow is matching that one. So yes, there's supply in the system, but hey, nothing goes up in a straight line forever. That's if we compare the amount of supply, like if we compare the latent supply that is manifesting itself so far in the market, and we give it a red box, and this is a really practical tool that you can use. So that's how much supply has been demonstrated so far. Okay, now how much demand has been demonstrated up to that point? Let's just take the last run to keep it simple. So we go copy paste, and we go here. How much demand is still in the run? And we're going to change this to a green box. Green for demand, and red for supply. Didn't want to move that one. If we just look at the last run from, say, down there, like, why would you do anything but equals R on that day? But then we kind of get to the next day. Well, is this sinister enough? And I still don't think it is. And hopefully you can see where I'm going with this. This one is starting to make me really think about it, but I'm still not sure that the supply side's in control. I mean, we haven't taken out, if we look at, for me, the problem with this, it's not a problem, it's just a reality, is that the last little point of demand, the last little trough was formed all the way back here. So I've got so far to go. And that's the beauty of having this short-term trend ribbon, is if that trough is a long way away, at least I've got a backup. At least I've got a backup point of, where I have to do something. This is not great, but not sinister, but, there might be a point where we start to, like this, we've got no choice but to say, okay, well, the supply side is now overwhelming, isn't it? But I'm at the short-term trend ribbon. I've got to let it do its job. And kind of today's the first point. It's just one of those things, you're going to get them where there were no obvious clear signals beforehand. You had to give it a go. You're a trend follower. But who am I to tell you what to do? You might have said on that day, that's enough for me. Like, visualize who's in control and the battle maybe on that day. For me, no. Honestly, for me, that day's, I'm frustrated, I'm annoyed, but I've got this huge showing of demand. Look how big this demand side showing is through here. Okay, I don't have a trough there, but boy, was there a lot of demand that came in there. I kind of have to give it, enough room. So today's the day. And if it closes the way it is now, I'm a minus R. I know we spend a lot of time on each case study, but hopefully you agree there are lots of learnings in each case study. I might not be getting to your one, but you'll be able to analyze your one using everything we've learned. We're going to have to pick up the pace here. Jeremy's got HZR, which I'm going to do very quickly, Jeremy. So we've got that. What do we say about algorithmic sell orders? Okay, so if we have the three possibilities here, which is plus R, equals R, and minus R, then obviously for me, it might not be obvious to the next person, that's off the table, because I don't have any of the things I like to see. I want to buy when we've got demand side control, like there. So this is a picture of me, of a turnaround setup. Look, rally above the... Oh, I did say it was my birthday, didn't I? Did I say that? I said at the start, I didn't say it in the recording. It is my birthday, and that was my auntie, my dear old aunt, calling me for my birthday to wish me, and I've just shut her down. I'll get back to her after the presentation. Rising above the long-term trend ribbon, pulling back, holding, and there's a big signal to buy. A little bit of volume there. So if this is what I want to see for a plus R, the question is, do I see it now? And I don't. So that's off the table. Equals R is off the table. Why would I own something that looks like that? And that leaves me one possibility, which is minus R. And Jeremy did write that it's a good stock. It's a really interesting stock. The share price is getting a bit whacked, but it's a really good stock, Carl. Jeremy, I don't care. I'm sorry. I don't care how good you think your stock is. All I care about is what those computers are doing, mate. Let's face it. Like, if I have taught you anything today, ladies and gentlemen, it must be that what you think, what you believe to have value in the market is completely irrelevant. And I know your mum told you, Cindy, Johnny, you're a delicate little snowflake. You are unique. Cindy, Johnny, your opinion matters. You go out there and you tell the world your opinion. And here I'm saying, sorry, Cindy, Johnny, but you're irrelevant. You don't matter. Your opinion's worthless. In the market, that is. Okay, we're going to do just a few more and we'll adjourn for today. I know we've had some interruptions, so we haven't done probably haven't done the full hour yet. BXN, look, it's a great looking chart, and I think it's done so well, and we're starting to see stocks that have done really well in this pullback and stocks that haven't. So I cannot possibly look. I'm not a plus R today, right? I don't think we need to plus R today. Is anybody desperate to plus R today? I don't think so. Hey, if we saw something magnificent, we would do it. This is not far off magnificent. And let me tell you, if today closed with one of these, if today's candle turned around and became this candle here, I would have no hesitation in going plus R, right? No hesitation. But we're not seeing that, okay? So just at the moment, I'm going to go no on the plus R, but we are so close to doing that. There's absolutely no reason for me to be minus R on this one, because the short term, all I'm seeing is demand side control. All I'm seeing is resilience. All I'm seeing is the world is going to hell in a handbasket, and the people who own Bioxyne don't want to sell. Why? Why don't they want to sell? Everybody else is panicking. Why aren't they panicking? I don't know. I don't care, but they're not. And that's all I need to know about. And there seems to be still a bit of demand soaking up the few that are panicking. So for me, we'll go green box here. Very much still equals R on this one. But can I say on the next demand side candle, we know what they look like, white candle, high close. Certainly I could go plus R. And let me draw a little arrow in to point to there. So when we come back in a couple of weeks' time, we know what we were talking about. Let's go EOS and ELS. Let's just do a quick little defence sector. Why don't we do that? Given what's going on in the world, we'll do a bit of a defence sector review. We've done some analysis here, as you can see. So let's start fresh, and not knocking my socks off, not shooting the lights out, for a bit of a pun there. So yes, and this is what's wonderful about technical analysis, is that there's so much hype out there, isn't it? You would ordinarily think, oh, I better go buy defence stocks. You know, there's a war. But what are the big fund managers doing? And they're not exactly falling over themselves to buy this one. The short-term trend is flat. The long-term trend is up, but I would argue very, very flat. We've got a major point of supply up here that I think will cause some issues going forward. We're not seeing that just easy run, easy path to gains that we'd like to see. So look, it's a no for me. As in, what does that mean? Could I go equals R? Let's just put them on there, minus R and plus R, and work through. Look, plus R obviously is off the table. I think we know that much. And isn't that great? Just to know that, just to take one option off the table. There's nothing in that chart that says I need to plus R today. Equals R. Is it fair to say, ladies and gentlemen, if we need to make that noise and think this long about it, that in our heart of hearts, we're not really there? And if we're not neither of the top two, then is it fair to say that we must therefore be the third one, just on the basis that who could be bothered at this point in time? Let's go to some of these other defence stocks. ELS, different story here. So, you know, whatever technology these guys have, it's far more highly sought after than what Droneshield's got. So this one I could definitely get to equals R. I hope I can get to plus R very soon. It's a bit like Bioxyne. Here I could very comfortably say next demand side candle. It's melting down today, and look how solid this thing is. Next demand side candle, without a doubt, I'm plus R. I can go equals R today. What about minus R? If you had it, if you already own, if you're lucky enough to have this one. No, there's nothing in that chart. Look at the candles. I mean, are we seeing a candle that is telling me that the algos have switched? Remember that zero switch? It was clear as day. You know, this is something to worry about. This is something to worry about. This is something to go, well, that's good. And this is nothing to worry about. So for me, therefore, it's pretty clear. Minus R is off the table. Let's put that there. Equals R is an obvious one. And we've already seen next demand side candle for plus R. So let me do that and get back to what I was trying to do there, which is put the cross through that one. And then we'll go to here, 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 In fact, that's not what I was trying to do. Let's go back to here. I have to unclick that. You have no idea what's going on here, but it is definitely crazy stuff. There we go. They're the two that we could do. And EOS is the other one. Look, somewhere between Droneshield and ELS. Clearly, ELS is the better of the three. This one's not terrible, but much we're going to set on Droneshield that there's that big point of supply that will more than likely have an impact on it. And we're seeing how that point of supply on EOS is impacting the price action. So, in and around here, this is where the trading was done. So in and around here is where I think we're going to see, and I know that that's discretionary. Oh, Carl, how did you know to draw the box that big? I don't know. I just know. But it's where the trading was done. So when we get down here, the people who traded in here thinking it was going to $20, they're very disappointed. And some of them will want to get out. So where did they trade? Where did they get in? Well, where they got in represents their break-even point. So for many, we all know that feeling. Please, God, just let it go up and let me break even and I'm getting out. Okay, well, is that what's happening? I don't know. Well, unless we go and interview every person who's selling. Oh, are you selling because you're breaking even after you bought it on that day? Yes, I am actually. Oh, we won't know. But if the candles show us that we moved into this zone and then the sellers came in, it's plausible, right? Now, this candle, it's a process. We know this. All this means, it's not the end of the world. It just means there's latent supply in here, right? How do we get rid of that latent supply? We need to trade with them. We need to do it in volume. We need to do it in motivation. And this candle is actually not bad, the one I've highlighted blue there, because we see the demand is starting to work through that supply. Okay, above average volume, we've got above average interest, we're starting to work. That's when I don't mind seeing strong volumes in here, okay, working through that supply. Today's candle is actually very good. It's actually, all things considered, it's very good. I hope we all agree, actually. I hope we all agree. I shouldn't say what I think anymore. I should say, look, I hope we all agree. Oh, this is an interesting one. Where would I draw that? There, and up to there, we don't know where the next one is, but price action's good. Short-term trend is up. Long-term trend is up. The candles are generally pretty good. I mean, this is happening for a reason. We know why. This one's pretty good. Today's not so bad. Hopefully we can all agree in the spectrum of plus R equals R and minus R that we can very quickly eliminate that one. We don't want to do that today. I think we can eliminate that one. We don't need to do that one today. And I won't go through where the exit is because we're very short of time, but I'm sure you can figure that out. Short-term trend revenue would be the first obvious place. So I think we can get to equals R on that one. ASL, important we zoom out every time so we can see things on a like-for-like basis. Let me delete those so we can start fresh. Obviously silver price down, a bit of a pullback here. I wish you could all shout at me. What's the thing that really strikes you about this chart? What is the thing that is most striking? Maybe you can type it in. Can you type it in? Try typing. We're at the end anyway. What is for me? I'll tell you what it is for me. Can anybody get it? I'll give you 10 seconds. I'm burning 10 more seconds of this webinar. That's going way over time. Okay, Simon's got it. I'm glad that we didn't have to wait till I. So Simon's got it. All the black candles. So for me, I see this, right? I'm looking at that in there. And remember how I drew the last box? So where would you draw this box? All right. Where did they trade? All right. So we go there. Okay, and then and I'm sure your trading platform will have something very similar, and you'll go, oh, Carl, you should have made it go up to that high. Don't be so pedantic, okay? Who's to say that the person that sold there is going to don't be so pedantic, please, with your technical analysis. Don't be so pedantic. We are looking for areas of demand and area of supply or excess demand supply. Whether it's there or not, we won't know until we see the candles. But what I'm trying to say here is that there's some proper supply in here. So we shouldn't be surprised at all by the fact that we may pause in here. Today's candle is actually very good. And look, it's not very good in that it's come down, but it's trying to hold this short-term trend ribbon. I've probably overstated how good that candle is, because it is actually still coming back down. But it's nice to see it's holding that ribbon. This one's a tough one for me, because I know I wouldn't be in this one anyway. Like, I wouldn't have owned this one until after. So for me here, my ZRP is here, that candle there. And you all know my model, and you all know that must be true, that at this point, I must have a zero risk position. After that candle, I am prohibited from owning ASL until it flips its thing back. So it's difficult to me to say, or say equals R, because I wouldn't even be in it. Plus R's off the table. It's tough. If I'm not equals R, then I kind of have to be minus R on this one. If I put myself in your shoes, if I squint, I can get to there. But if today's candle closes any worse than it is right now, I think that would very quickly become minus R. And I know that doesn't help a lot of people who say, well, Carl, mate, I didn't get out 6 weeks ago like I should have. I'm still in this stuff. What do I do now? And I'm trying to answer it from that perspective. Okay, let's do two more, and then we're done for the day. Michael's asking for Netflix. I'll do that after session, Michael, because we're probably in this environment wanting more Aussie stocks. Whitehaven. Oh, good. Hey, let's do more than three. We're going to do a bit of a coal sector review here, aren't we? Because we saw the coal price is popping up. Now, not all of these are predominantly exposed to the thermal coal price. Many of them are exposed to the metallurgical coal price, and that one's not doing so well. But let's still look at the coal stocks. Whitehaven Coal, not great, not terrible. Today's candle, I think, is definitive, isn't it? If it closes like that, we will not be going to, you can do whatever you want. I will not be going. I have to be careful, because I'm sure ASIC watches my videos every week, and Carl, you're not allowed to tell people what to do. I know that, but hey, there's a lot of people out there that are telling you what to do, and I put to you, they don't give you as good advice as I do. But I'm not allowed to. So no, not plus R. So obviously plus R equals R. Minus. I'm not telling you what to do. I'm telling you that how to do the analysis yourself and come to your own conclusion. So obviously we can't do that. Oh, geez. If today's candle closes the way it is, I don't think I can get to there, which leaves me with one option. That's like, clearly this is a MPOS, and do I want to muck around with that? The best type to be in trends is when we've got this sort of stuff, not necessarily this sort of stuff. So it's still too early. I'm not saying that this can't get better. Like, if we saw, remember all the dashed lines I drew? That's me just drawing the price action I do want to see. So get above the short-term trend ribbon, pull back, test, hold it. Tell me that the demand is now buying the dips. That's why I want to see this price action. Carl, why do you have to wait? If it gets above the short-term trend ribbon, that's enough, mate. Well, it got above it today, right? And it has failed. We want to see that short-term trend ribbon going from impeding the upward price action to supporting it again. Okay, and that's how patient I am. I'm happy to give up another 30, 40 cents to be sure I've got that under my belt. Okay, let's go to Whitehaven Coal, which I think we'll see a better result. We are, because this is the one that has the most exposure to thermal coal, and it's pretty evident there. Yancoal is another one. We'll look at that in a second. Obviously not able to overcome the terrible day on the broader market, but still, like many we've seen today, going pretty strong. So, is this a minus R? Should I be panicking out on the basis of that last candle? What do you think? Hopefully you agree. No, I don't think that last candle is anywhere near sinister enough. It's nowhere near a supply side showing. It's the algorithms are flipped from buying, because the algorithms were buying. Is it fair to say the algos on this were buying? And we want to be buying too. If the algos flip to selling, we want to be out. Okay, or eventually we want to be going short. So no, I think we can quite happily get to plus R there. So equal. We don't want to cross out equals R. No, did I say plus R? I misspoke in my rush to finish today. And if I do that, we're not here. We're not far off plus R. Like, if today's candle closes at its high, we're actually back at plus R. So that's interesting. Okay. Oh, there's a bit of supply up here though. But I think we're working through it. So how do we draw the box? That's our supply zone. Click on here, draw it across. That's okay. That's good, because we've consumed that supply. That's good. Maybe it's a bit nagging today. No, I think we've consumed it, but then there's another one up there. So I know I'm rushing, but I want to get through them. Yancoal, I think we said we're going to do. Again, you can see it looks more like New Hope than Whitehaven. Today's candle's not ideal. It's not ideal for many stocks. Is today the minus R candle? It's not close yet, so I can't say, but I don't like it engulfing the previous day's candle. If I saw confirmation, I don't think I'd do anything on today, but if I saw confirmation, then I'd start to think about it. But you can see I'm still a ways away from that one. I can't see the future. I don't know the candle, so I shouldn't comment on things I don't know. SMR, I'd say that's looking quite constructive. Let me get rid of some of these there's so many arrows there. This is more turnaround setup, isn't it? So we can see we're trying to emerge from this long-term downtrend. We've come back, we've pulled back, we've double bottomed at the long-term trend ribbon. We are showing signs here, I think. We said how important it is that the short-term trend was closed above. We're coming back, we're pulling back. Today's the day, actually. Today is the pullback. We didn't see it on this go. It didn't happen. We went back beneath it. But today we're up. Lower high, lower low, we are pulling back into it today. So if we get a close on the high, I could actually go plus R today. But having said that, is this going to be, and you've got to understand that I haven't looked at every stock yet, and I'll do that tonight. So here's what I will say, is if I think this is not only a plus R, but one of the better plus Rs, I'll do my work tonight, because I do my work every day the market's open. I do exactly this process and come to a shortlist, and then I shortlist it again for you. So if I feel SMR deserves to be plus R, you'll see it in tomorrow morning's chart watch. So that's pretty neat too. We talked about the trend ribbons, as I said. If you're watching the recording, if you head down to the description of the recording, there is a Google form link. I promise it won't raid your bank account. Just type in your email, your name. Very important you put your name. For people that don't put their name or they just put XXX, I don't give you access to my trend ribbons because I think it's common courtesy. You give me your name. Full name's better than just Jeff. You know, you know who I am. That's the sort of thing. Anyway, I still give it to people who are just Jeff. And you trading view username. Hey, if you don't have a trading view user account, often that's the case. People fill out the form and they go, I don't have an account. And I go, well, I can't give you access. Or they put in something in that thing. You know, get yourself an account. The basic account is fine. That's the free account, and you'll be able to use the ribbons. If you are watching in the recording, hit the subscribe button to stay notified of all of our video updates. We've got lots of content coming this year on ChartWatch and other things as well. Hit the thumbs up button. Let me know you like what I'm doing. So that helps me to continue to do more of it. Apart from that, ladies and gentlemen, it's been an absolute pleasure chatting with you today. Hopefully you enjoyed the whip around the grounds and then some really good, really practical, technical analysis as well. In the meantime, that one, back to front, what does the sign say? Keep calm, everybody, and follow the trend. Until we catch up again. Bye-bye for now.